Imagine waking up one morning to discover that the money you worked for is suddenly worthless. It costs more to access it, and it earns you absolutely nothing while it sits in the bank. Imagine a banking system that charges you for simply existing. Monthly fees, swipe charges, withdrawal charges, transfer fees, maintenance fees, all while giving you 0% interest in return. Ladies and gentlemen, welcome to modern banking, the only business where you give them your money, they use your money, and you pay them for the privilege. And today we are diving into the truth the banks won't tell you. We are talking about the end of an era, and trust me, by the end of this show, you will never look at your bank the same way again. Uh, Before we compare the the old world of banking to today's chaotic financial landscape, we need to understand where banking came from, especially in Zimbabwe and across Africa. What was banking like in the past? Well, historically, banking was very simple. A bank had three main jobs. Number one, to protect people's savings. You put money in the bank because it was safer than keeping it under your mattress or in a tin in the ground or behind the brick in your kitchen. And number two, to grow those savings. Banks paid interest, real interest. Your money worked for you slowly, yes, but consistently. And number three, to provide responsible loans for productive purposes. Banks helped farmers grow crops, small businesses expanded, and families managed to buy homes. Loans were based on the idea of building wealth, not tripping people in debt. In Africa, for many years, the bank was a symbol of trust. If your parents or grandparents ever told you stories, you would hear things like, back then, interest rates on savings meant something. Back then, you could open an account for free. Uh, Back then, your bank tried to help you. So what happened? Uh, well, modern banking evolved, and unfortunately, not in a good way. It became too profit driven, not customer driven. It became too extractive, not supportive. It became digital, but not empowering. Convenient, yes, but costly. And this is paramount in Zimbabwe, especially in Zimbabwe. We have watched the system turn into something unrecognizable. Low to no interest on savings, endless charges on everything, even charges on notifications of receiving messages, high interest rates on loans that crush families, banks lending out money they don't actually have, uh, people paying exorbitant fees to just to access their own money. In short, we have shifted from a banking system designed to protect the everyday person to a banking system designed to extract value from the everyday person. Of course, I can talk about banks without mentioning the role of inflation, especially in Africa. Across the continent, inflation is eating away at the value of the local currencies, from the Zimbabwean dollar, the ZiG today, to the Nigerian naira, the Ghanaian cedi, the Malawian kwacha, and many others. And inflation, what does inflation mean? Inflation means your bank balance might stay the same, but your purchasing power is going down. And this brings us to the banks. The banks, they don't adjust your savings interest to match inflation. Unfortunately, they don't protect you from currency collapses. Mhm. They simply survive while you suffer. This is the background. This is the context. This is the system we live under today. And let me break down exactly how modern day banking works and why it no longer serves the people it was created to protect. We have these monthly bank charges that are essentially a silent thief. Banking fees in Zimbabwe and many African countries have become very outrageous. You pay for monthly account maintenance, ATM withdrawals, bank to bank transfers, swipe transactions, card replacements, statement requests, account closure, and so on. Some banks even charge you to receive money, and uh, banks make billions from charging the poorest of customers. A bank used to make money by investing your savings and any interest from that money. Now they make money by draining your balance through these many fees. Before I go in further, I have to talk a bit more about savings accounts. And in the old world, if you put your money in a bank, it grew. But in Zimbabwe today, or in Africa, eh, your savings accounts earn almost nothing, sometimes zero. But if you're lucky, you might get a bank that might give you 0.01% percent. Meanwhile, inflation is 10%, 20%, 50%, or more, depending on the currency that you're using. So your bank says, give us your money, we will lend it out for profit, we will charge you fees, and we will give you nothing. Savings in Zimbabwe aren't really savings. They are gradual losses in slow motion. And here is a funny fact the banks hope you never think about. Uh, the banks don't keep your money in the vault. Not all of it, not even most of it. They lend it out. They invest it. They use it for their own financial gains. And this is called the fractional reserve system. So you deposit $100, the bank keeps $20. The other $80 is lent out or invested. And if you multiply this by thousands and thousands of customers, as soon as a single bank is playing poker with your money. And this is why banks collapse. This is why withdrawals get limited. And this is why people panic. Your money, uh, it isn't really yours when it is in the bank. It's a liability in the bank's books, not a protected asset. And speaking of lending, loans in Africa, especially in Zimbabwe, have become dangerous. Interest rates can be 30%, 50%, 100% annually, or even monthly, even higher when inflation spikes. People borrow to survive, not to create wealth. And when loans are tied to volatile local currencies, repayment becomes impossible. People end up losing homes, they lose cars, you might even lose your business. In the old days, loans were sort of like partnership. Today, loans are traps. Banks now, you need money. Your salary isn't enough. You don't have alternatives. Uh, so they charge you whatever they want. They know this. The banks know this. And the Zimbabwean banking system is, as you might know, the Zimbabwean banking system is heavily regulated by the Reserve Bank of Zimbabwe, uh, which is the government, in other words. And the government is these ever-changing monetary policies. And what does this all mean? If the government want your savings to collapse, your savings will collapse. If inflation rises, your savings shrink. If exchange rates change overnight, your money loses value instantly. And you work hard, you earn money, uh, you deposit into a bank, and a year later, it buys half of what it could have before. Your bank does not protect you from inflation because a bank is part of the same system that causes inflation. And while the rest of the world moves to more efficient, fairer financial systems, African customers are trapped in legacy systems with high fees, limited access, bureaucracy, slow transfers, uncertainty, crazy KYC processes. And no wonder why 70% of Zimbabwe's economy is informal and does not rely on banks. And meanwhile, we have digital assets that offer 24/7 access, no middlemen, low to zero fees, global value storage, transparency, predictability. And while banking is slow, digital is fast. Banking is expensive, digital is cheap. Banking is closed, digital is open. And let's be honest, the system is too deeply entrenched. Uh, these banks are built on old laws, old infrastructure, profit incentives, profit incentives, centralized power, currency monopolies by the government and the likes. And let's be honest, they won't change because changing means giving up control. It means giving up revenue. And the everyday person, you are always left holding the bag. But fortunately, there's a new system emerging, a parallel system, a fairer system, a system that doesn't require trust in a middleman, a system that doesn't inflate your savings away, a system that doesn't punish you with fees. And that system is built is it's built on digital money. Uh, Ladies and gentlemen, we are witnessing the end of an era. The era where banks were guardians of your money, uh, where banks acted in your interest, allegedly. Yeah, allegedly. They acted in your interest, allegedly. Where banks existed to save the people. That era is gone. Uh, Today, banks protect themselves, not you. They squeeze you with fees. They give you nothing on your savings. They lend out your money. They trap you in debt. They cannot protect you from inflation, and they cannot secure your financial future. But there is hope, and we are entering a new financial world. One that is built on Bitcoin, digital assets, and blockchain technology. And this is a world where you own money fully. Your savings grow or hold value over time. Uh, Inflation cannot eat your wealth. Transfers are very cheap. They're instant. There is no middleman taking a cut. The rules are transparent. They are predictable, and they are fair. Uh, and speaking of Bitcoin, Bitcoin is not just another investment. It's a response to the failures of the old system. And blockchain is not a trend. It is the infrastructure of the future. Digital digital assets are not speculative toys. They are tools of liberation, especially for the African continent. Uh, the banking system had its time. It played its role, and now that chapter is closing. We must embrace the next chapter, where financial power returns to the people. And this is not just the end of an era. This is the beginning of what I call a revolution. And here on the Tomorrow Money Show, we're going to be leading the way, one episode at a time, of course. And as you might know, my name is Munyaradzi Togarepi. Thank you for watching. Until next time, stay informed, stay empowered, and remember, the future of money is already here. Thank you.